What's up, investors? I want to ask the question, what has been one of the best performing positions investments of 2022? The answer may surprise you. I'm sure that some people have come up with individual stocks that have bucked this trend, but by and large, stocks, crypto, all the risk assets are down and they just keep on bleeding out. All this is predicated on the narrative that we've been hearing for the last year and a half since early 2021 that inflation was rampant, the Fed was going to have to raise rates, that will slow growth, and they may even lose control of inflation. So, this meme, this idea, has been persistent for the last few months that cash is trash. Well, what if we actually looked critically at that thesis? What if we looked at the dollar relative to other currencies in the world and found that one of the best positions for 2022 was actually to be long US dollars? In other words, cash is a position and it has been one of the best performing assets of 2022. That may be a little bit surprising, but let's actually look at it. We're looking at the DXY right now. This is the dollar currency index. Another proxy that you can use if you want to actually maybe put this in a portfolio is UUP, which is the US dollar index bullish fund. But let's look at the DXY because we have a good history to look at. Today, as of making this video, it just made a new high coming up close to 105. What this is, it is a representation of the value of the US dollar relative to other world currencies. What's happening as the Fed raises rates is dollars are hard to borrow, the supply of dollars are lessened, and therefore, theoretically, in the Forex market, you assume that the value of that currency goes up. Meanwhile, other countries, Japan, the Eurozone, have not raised rates. In fact, in the case of Japan, they've even worked to devalue it even more. We can see this with the dollar yen, which year to date, if we go back and look at, let's say, January the 3rd of this year up to here, it's up almost 11%. Now, of course, the best trade of the year would have been to short stocks, short crypto. But if we're looking to put our capital into something, it really has been counter to the public sentiment having cash as a position because cash is a position. And I'm saying this because I want people to feel a little bit better about having some dry powder right now as all the risk assets are in free fall. I've actually got a little story for you guys here at the end of how I've personally been handling this down move and something amazing that happened for me. But what we want to do is we want to keep an eye on the dollar index because essentially, if we use a little bit of thinking here, your dollars that you have as stocks go down, your dollars allow you to buy more stock if you think about it in those that kind of relationship. And so the value of the dollar is actually rising as stocks go down. Now that doesn't help you if you own stocks, but if you do have cash, you do have that dry powder, as they say, on the sidelines, which you should always have. Now you're entering into the phase of the market cycle where you can be very picky. I know a lot of people are buying stocks that they really like. They're trying to pick stuff up when it's cheap. Me personally, I like to wait for a little bit of confirmation that the buying has started. And we really don't have that quite right now, but I'm going to be watching for it. And in videos that will come, I guarantee you, promise to you, I'm going to start looking for opportunity. But for right now, cash is a position. And relative to cash and other other world currencies, the dollar is performing very well. Now, where could this thing go? Like, can we use the DXY to gauge it? More or less. If we go back and we look at the dollar index, some of the highs that it's made, COVID, the bottom of COVID, March of 2020, we've actually surpassed that. That was a 103 on the dollar index. And then back in 2016, It was up around 103 as well. So we are at highs of the last decade with the dollar. Doesn't necessarily mean it has to turn around here, but I am talking about something that has run for a while. That being said, in addition to looking at the S&P 500, in addition to looking at the VIX, one of the key things I'm going to be watching for is the dollar index, the DXY, to begin to roll over as a sign of a potential market bottom. But by making new highs, we don't quite have that yet. But these are going to be the data points that I'm looking at and trying to, for the most part, pick the bottom. So that's what I'm going to be looking at for the next several weeks and as this year goes along. Now, have an anecdote, which I'm going to say not to toot my own horn, but just to share a story and an experience that may be helpful, put people in the right headspace now when everyone's concerned about what the future may bring. I too have been looking at my portfolio and I'm not happy. I've been a little bit in need of feeling some wind in my face. And for that reason, I have a motorcycle. In that way, I am a high risk personality, you'll say. It hasn't been operating for a while, but Wednesday, about a week ago, I was out working on it to get it ready because I needed to go for a ride to clear my head. While I was working on the motorcycle, a guy pulls up in a truck. He's looking at me working on it. We get to talking. He's another motorcycle enthusiast. He's in from California to clean up and sell a property that is adjacent to mine. He's only in for a few days of the week. It was a rental. He's looking to offload it. I go and I take a tour of it. It's really nice. In fact, every time I walk out on my porch, I've coveted this property. It's got a gorgeous courtyard. It's got a two-car garage, and it's attached to a condo that's very nice square footage. It's just the best location on the block. And so I ask, "What do you want for it?" He gives me a price. It's fair. It's very low in this market. I know he could probably get a lot better. I walk away. I think about it. I call a friend. As Carrie has said, I have a team of real estate folks that help me out. My realtor friends, very good. But what realtor is not going to actually tell you to not do a deal? So he says, go do it. So I go back to the guy. He imagine an older version of myself, biker dude, long blonde hair, blonde beard, going a little gray. And I say to him, you know what? I'll take it. He thinks for a split second, reaches out his hand, we shake. Did the paperwork Wednesday evening, went under contract Thursday morning. Handshake real estate deal because I had some dry powder. I didn't know what real estate I wanted to buy, but this felt right. I've never done something more spontaneous in my life, honestly. Such a big decision. But it came in this condition where I don't really like anything in stocks. I don't like anything in crypto, but I found a place that I want to live. And it was because I took myself out of looking at charts all day and decided to go live life, that I put myself in the situation in the right place and right time to get a handshake real estate deal in this market. I feel really good about it. And it probably wouldn't have happened if the market hadn't have made me take a break. And so I share that with you all because you don't necessarily know where the next opportunity is going to come, but have yourself open both emotionally and financially to it. And one of the ways you're going to do that is by keeping some dry powder ready for when an opportunity does present itself. And it may not come in the direction that you're looking. So I hope that that can help align some people's perspective to this current market volatility. It's probably going to be okay. I still think that we are in a correction. Correction territory ends at about 20%, and we're brushing at it against it today. But at the end of the day, take a longer term view, and I think everyone's going to be all right. Look forward to keeping you updated and finding opportunities in the weeks to come. Trade wisely.